Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So last night, I don't know if you're hanging out on Sunday, barbecuing, doing all the things you should be doing in spring. You probably had your phone light up saying, oh my goodness, there was no oil deal. Oil's down 6%. And then everyone's like, that means finally a top is in. Everyone was hoping for it for the past friggin' month. And, if you were obsessing about it, you wasted your time. You probably even got yourself a little frustrated where you weren't able to see what was going on in the actual tape today. So, in the morning call, we talked about 3 different levels in the S&P on what needs to hold in order not to be too bearish, and where you have adjustment areas on, if you went out light into the weekend because you didn't want to be, excessively long or short into a big event that you thought was a major correlation. There were spots to get back involved. Well, anyway, let's just go to the chart of the SPX. You'll see, in the morning chart that I write every day, you can look at it on Twitter. We talked about the 8-day moving average. The 8-day moving average is right here. That was a 2068. What did we touch today? We touched when as low as 2073. So, it didn't actually reach there, but what it did is it reclaimed 2076, which was Friday's low. So if you were short, maybe you covered there, or if you were flat, maybe you said, I'm going to try some versus the 30-minute low, and then if not, you had this, bull flag spot where it then took out, 2083, which was Friday's high, and then it even took out last week's 287 to close at 292. So now it seems like, you held sideways day 1 up. Maybe we get day 2, day 3. We'll figure it out. Obviously, no one wants to chase and get caught, at a potential, resistance area, and it is a resistance area. Here you go across. This is some big resistance coming in right here, and then you have, this whole mess. So with that being said, there are setups that you can keep moving, and you don't have to be excessively long or short overnight in order to find the trades to make money. But if you take this out of the way, all you have is a nice consolidation. Things went from red to green, pushed towards the high. So now we'll see what happens with IBM and Netflix, and I'll go over that tomorrow morning in my morning call. I'm not trading them after hours because I'm here and then I have to go home. What did the Qs do? The Qs, didn't have as powerful of a day because Apple was a little, Apple was a little pressured. I'll get into that in a second. But overall, not really bearish action. It held the 8-day, got back above the last week's range and closed well. And if IBM is good and if Apple bounces, maybe this is going to go. The bios look pretty good. Early in the day I had a decent trade with it, and I think if you wanted to play something for continuation, this does seem as if this could play some catch up to get to the 200-day. Here is when we did the options strategy, and now that it's hanging in better, I feel like you could be in some of the names or even the indices where you won't get as blasted as you did when things were in a downtrend. So I'm actually in the LABU, which is 2 times. It's just a little less expensive as far as capital, allocation. But anyway, so if this gets above this, maybe you get another move. Last time we talked about it was down here. And it does have significant room to the upside, so we shall see if money wants to go there. The Russell already took back the 200-day right here, so it got to it, hovered, and boom. When I listed how compelling it was down here. When the market had its first zoom where no one really knew what was going on and couldn't catch it, but then once it went sideways and held here was your tier 1, here was your tier 2. Now it's been above the 8 and 21 days since. So what do you want to do? You want to be constructive on sectors that are above the 8 and 21 day. You could have waited till here versus just shorting, and I think you see way too many people out there just trying to short this indice. I don't think actually many people here have done it. I don't think I've been short the IWM since, I don't know, somewhere around here. But anyway, looking pretty good. As far as my focus today, I guess it was lucky. Thank goodness for my son. On Friday morning before leaving, I woke up. He's like, "Daddy, the Jungle Book's coming out. We got to see it this week, and I can't wait." And I was like, "Oh, I just saw that. The coming attractions for that so many different times. That looks awesome. It could be like a Lion King." So went long Disney on Friday. Chart looked good, and then today I posted the chart around 9:15, and we talked about it in the morning call. I said if it gets above 99.80, maybe this could go. It also was upgraded, and then here's Disney. With a nice clean move, and it seems as if, we'll be here maybe tomorrow. You have a nice little gap that showed power, never got filled. Day 1 up, out of this range above this channel here. Barring anything crazy, you would think that you could stay long it for at least a move to here. I have a little less than I had overnight. Friday, but I have, but I had more intraday through this price point, but then I trim and trail. So I'm still in it, and I have a decent size, and I think that it can continue. Sperling's been all over this. Congratulations to Mark. He, definitely had a really nice trade, and the highs on Disney's all the way up here. So why not, if the market stays constructive, could we see this spot? So we'll see. Apple I got stopped out of on Friday. Engulfing bar, lost a 200-day. That got me out. 111.31 was that spot. Now it tried to come off lows and hold the 21-day. I'm not sure, what's going on here. There was an article out of the Nikkei or the Japan saying that the production cuts. Either way, if you go trade both ways, look, this closed week engulfed this range. If you went out short, you got paid. If you got stopped out here, you'd have to deal with this pain. So at this point, all we know is this spot, which is 106.94, and we'll see, if it holds it, develops a channel before earnings, and then we'll see what the story is there. But either way, there are two sides of every trade. Facebook didn't do much today. Facebook kind of hanging in there. I'm not so sure what this wants to do. Had a very, erratic week where it's coming in, and it's, has a defined downtrend. So maybe, I don't know. We'll see what happens with Netflix and with some high beta names. But if it can get above this, perhaps it tries to pop a little bit before earnings. There's still no confirmation on whether or not they cut back the ad spending. But either way, it's getting tight. It's been a two-way trade, so I haven't really been sitting in it overnight because I just don't know which way it's going to be, considering it's now below the 8 and 21-day moving average. But above this, maybe it acts a bit better. I just saw something come across the tape. IBM 235 per share versus expected 209. So maybe we'll see if IBM's up. It could be. So anyway, we'll see what they say in that conference call. What's next? Amazon. A lot of people are very happy on Twitter because we posted this strategy here, and we've talked about it so many times. Me and Annabelle were talking about the great setup in Amazon, and now look at it. Multiple days later, already at the target, pre-earnings, so you don't have to take earnings risk. And now, now it's up 1, 2, 3, 4, 5 days. You're always prone to some pullback, which you had intraday today. And every time you think it's happening, I wouldn't say short it because guys probably started to fade Amazon. I saw other people say, "Oh, look at Amazon, calling it's a top," and basically sometimes you could sell it, but it doesn't mean it's a short. And people maybe shorted it here, came up, shorted a rally, and then just got squeezed, into the close. But whatever, we'll see. Maybe Netflix saves them. Netflix is coming out after the close. We'll see what happens there. It was weak, bounced into the close. If you're trading it after hours and you want to be long, the number has to be really good with guidance, and only be long if it's above 112. If it's not above 112, no reason to be long it. If it gets hit, see if it holds the 200-day. The 200-day is down here at around 99. So again, this is momentum level number one. If it goes above it after hours and you want to be long, do it. If it comes back below it, be careful. Remember what happened right here, or somewhere around there. When it got above, couldn't hold, and then boom. So you'll see what happens there. Banks look pretty good. JP Morgan hovering above the 200-day moving average now after a nice move. I don't think there's that much left in the tank, but if the market wants to continue to go, its earnings are out of the way. Nice little flag here above this spot. It could fill this gap there. Bank of America. In my note today, I talked about all the different support levels I need to hold that maybe you want to buy a dip on. And Bank of America wasn't a blockbuster move, but it held above this prior pivot. So if you got long it from a red, nice red to green trade, you're in there, and maybe it flags and goes above that. Citigroup, also decent short for some guys, held in there. And then we'll see what happens tomorrow with Goldman Sachs. Goldman Sachs is pre-open, and stock's been annihilated. So if they want to continue to squeeze the shorts, all they got to do is get it above this, hold it above this, and then that'll help that sector, and also probably get the Dow a little bit further above 18,000. Lots of chatter today about the Dow above 18,000. Oh my goodness, here it is. Let's see it. Is it coming? No, it's not. See, it's scared. Well, here's the diamonds. Diamonds, basically correlate to the Dow, and it's above 18,000. And remember how many times it crossed 18,000 last year? It was such a pain that took us. Probably 40 plus. Well, this time is a little bit more significant, considering if you were to talk to anybody, including me, in mid-January when we fell off a cliff, no one would have thought we would have been back up here at 18,000. But you did have spots where you didn't have to have an opinion. When the Dow took back this area, when it showed commitment, if you missed that low there, because no one is really that good about getting a low, maybe you saw the low, the higher low, but this was a spot when it said, okay, here's commitment, back above the 21 day, time to look more constructive on the market versus, faulty. And that's what it's been doing the entire time. With all that said, hopefully you had a good day today. You're better off looking for setups versus looking for tops, especially if you trade for cash flow and alpha. Have a good night.